Ladies and gentlemen, good day and welcome to the ELDECO Housing and Industries Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause future results, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges and on the company's website. Should you need any assistance to receive them, you can write to us and we'll be happy to send them over. Today, we have on the call the senior management of ELDECO Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Kapil Saluja from Finance and Accounts. We'll begin with the highlights of the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Pankaj Bajaj. Over.
Thanks, Abhishek. Good afternoon. I would like to welcome everyone to ELDECO Housing and Industries Limited Q3 FY23 results call. Let me begin with a few comments on the real estate market, after which I will discuss operational and financial results for the quarter and 9 months ended December 2022. Residential real estate experienced robust rise in demand last year, fueled by reduced loan rates and demand from clients looking to upgrade their house. Despite rising interest rates and house prices, demand for housing has remained strong in the present year also. If we look at a 10-year period from say 2012, the CAGR in house prices in India and also the volumes have been quite muted. In this background, we feel that the demand side will remain strong in spite of the recent spurt in prices and volumes. Similarly, in Lucknow, the demand for housing remains high. The Lucknow real estate market has progressed from a state of stagnant inventory to one of supply scarcity. Supply is reacting to the demand with a lag, primarily due to the time required to assemble new parcels of land and the 1-year approval cycle. New projects are taking their time to hit the market. This is also reflected in our third quarter performance. During the quarter, the company handed over 109,214 square feet with 100 homes successfully registered, compared to 84 homes sequentially. The quarter's collection remained at rupees 38 crores, with sales bookings at rupees 22.3 crores. The area booked for the quarter was 47,443 square feet, compared to 2,56,190 during the same period last year, owing primarily to considerable bookings from our Imperial project in Q3 FY22. All our existing projects are developing well in terms of execution, sales, and collection, and we are confident that we will complete them all within or before the RERA timeline. Going forward, as previously stated, our current focus is on boosting supply to meet the rising demand. We are gradually expanding our land bank, and between April 22 and December 22, we purchased a total of 16.52 acres of land. We were able to increase our beneficial share of the Bareilly project from 40% to 50%. Furthermore, we intend to launch 2 additional residential projects in Lucknow by the end of the current financial year itself. We are also in early term sheet stage negotiations for 2 additional projects that will be launched in the coming financial year. This gives us a sense of future growth and allows us to plan for next year's launches and serve the rising demand. The revenue from operations for the quarter stood at rupees 30 crores in Q3 FY23 compared to rupees 42.7 crores in Q3 FY22, and rupees 32.9 crores in Q2 FY23. The revenue from operations for the 9-month period FY23 stood at 90.4 crores compared to rupees 97.9 crores in 9 months FY22. The EBITDA was at rupees 12.2 crores in Q3 FY23 compared to rupees 17.1 crores in Q3 FY22 and rupees 9.6 crores in Q2 FY23. EBITDA for the 9-month period ended 31st December 22 was at 33.1 crores. The EBITDA margin stood at 40.7% for Q3 FY23 compared to 40.1% in Q3 FY22 and 29.1% in Q2 FY23. The company's profit after tax stood at rupees 10.5 crores in Q3 FY23 and rupees 29.5 crores for the 9-month period ended 31st December 2022, respectively. With this, I would like to open the floor for questions. Thank you. If there are any questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Monica Arora from Globe Secure Advisors. Please go ahead.
Good afternoon, sir. Thank you for giving me this opportunity. So just want to ask a couple of questions. Like, I can see that you are building on your supply. So when can we expect that these would start contributing to the cash flows? And what would be the rough estimate of these cash flows, like how they will convert into your revenue?
I missed the first part of your question, Monica. What is the question about?
Yeah, so I was saying that I can see that you are building on your supply. So when can you see the cash flows out of those supplies, and what would be the rough quantum of these cash flows, basically?
So it's there in our presentation. We have in the slides which says forthcoming projects. We are going to launch the number 1 there, ELDECO Interior Phase 2, and number 4, ELDECO Latitude 27. So they are going to get launched as soon as. So we have already received the main approvals from the local bodies. Now we have to get the environment clearance and RERA registration. It's a 4-5 month process, but there's a lot of pent-up demand for these projects. Together they have about 9 lakh square feet, and that's a sale value of say 300 to 400 crore rupees. Apart from that, we have a couple of other projects also, which are also decent size projects. So total about 800 crores of sale value is projected to be launched in the next 12 months, depending on how quickly we can get the approval. And we expect that the booking value on launch itself should be at least 50%. So that's the plan for the next 12 months. Obviously, it takes some time for that to get executed and to get recognized in the books and revenue. That's going to come with a lag of a year or year and a half after that. But the supply pipeline is getting activated as we speak.
Okay. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Yeah, thank you. I just have 2 questions. One is on the forthcoming project that you have given to be launched. How much land bank is left after you remove this project? And then you can say other way, how much million square feet area can be launched on the projects which are not yet a part of this forthcoming projects?
So the forthcoming project total is about 1.5 million, as you can see.
Right.
And another million or million and a half, which is in early stages, which we are not disclosed in the forthcoming project because it's a little early and the land has not been taken over, the approvals, etc. So total about 2.5 to 3 million is there, kind of.
Okay. That also includes the 16 acres that you have purchased?
Yeah, that includes that.
So, and second question was on the restructuring topic. You have another promoter entity also looking at the NCR region. Can you get a thought on what you plan to do? Is it a plan to look at some restructuring so that the incentives are totally aligned and the combined become a larger company?
So that's a thought that often crosses our mind, and we've been questioning about that in the past. The thing is that merging two real estate companies, there are a lot of regulatory stuff. So that's what we are trying to figure out whether it is worth it or not. Because you have to take multiple approvals from the concerned RERA bodies and there are stamp duty implications. So there are costs and benefits. We have not yet decided, and at the appropriate time, if something works out, we'll take it to the board and obviously disclose it then. But at this stage, it's premature to make a comment or timeline.
Got it. And can you also give some forward-looking estimate or thought process of how you see the market for the Lucknow and Kanpur belt in terms of price movement? Because if you compare the prices of North India with South and other parts of NCR, it's quite low. Even tier 2 cities in India, they have usually very good prices. So any thoughts of yours, like how you see the per square feet rate of that Lucknow Kanpur belt?
Good question, Neeraj. The first part of the question, the demand-supply dynamics are totally in favor of the supplier right now. There's a lot of pricing power that good brands now command. So I touched upon that in my opening remarks. There's a kind of stagnant kind of situation, but now it's a supply scarcity because new projects are not coming for various reasons. And that is also getting reflected, I think it's somewhere there in our presentation, that our average realization used to hover around 3,500 rupees a square foot traditionally over the last 4-5 years. But in the last 1 year, it has gone up to 4,500 rupees a square foot, which is a jump of nearly 25 to 30%. So that's been the improvement in realization per square foot in a year, and that's weighted average across products. And we feel that this trend is there for some time. I don't see a correction happening in this rise, and I think that the coming year will not only see increasing realization but also increasing volume, subject to our being able to launch the projects that we have tied up. So both are looking good. The pricing is going to rise definitely because the current prices are. And another trend which is reinforcing this is the gravitation towards branded developers. So the market is willing to pay a premium, and also the gravitation towards an upgrade of houses, so which also means that people not that interested in affordable housing, they want a higher end of the product, so which also means higher realization per square foot. We think these are both strong trends and are not likely to get reversed very soon. So we feel that prices are going to rise and the volumes obviously are going to rise.
And sorry, I'm pitching one more question. See, you took a 41% margin on EBITDA side. Because of the price side, do you see that the EBITDA margin moving upwards, say, next 2-3 years, because those will be reflected in your income statement when they start completing?
The question is that the EBITDA margin is going to improve further. Is that the question?
Yes.
I would not bet on it because on the same side we also have higher land prices and higher input costs that we are contending with. So there has been a well-documented inflation in input costs. It is possible that some products, the plotted development and the horizontal development, could have higher EBITDA margins. But at the same time, the group housing projects don't have these kind of EBITDA margins. And we have one more thing, if you notice, these are some of the highest margins in the industry.
Yes.
Bottom line that we do for our top line is, the other companies do about 3 times the top line to get this kind of bottom line, because our EBITDA margins are very, very high. I don't know if there can be further improvement in that. Only if the product is completely skewed towards plotted development, could there be an improvement. But I can't. I would not. I don't know. Assume things as they are. I would not say that they would improve significantly.
And what is your target square feet to be sold for next 2 years? Because there was a jump in FY22.
About 1.5 to 2 million square feet.
Okay. Great. And this is for next year, right? FY24.
So next 2 years, I think we should be doing, in terms of sales value, I think next year we should be doing about 300 crores plus. And similarly the year after that. This year, the current year has been a little low for us because we have not been able to launch new products for various reasons. But we are going to cover up next year and the year after that.
Okay. Thank you.
Thank you. The next question is from the line of Dinesh Shah from Alpha One Investments. Please go ahead.
Thank you for the opportunity, sir. I have a couple of questions. What is the visibility on order pipeline for next financial year, and whether it would be residential flats or standalone houses?
So I already answered the question in the last question that I answered from Neeraj, that I said that the next year we should be doing about 1 million square feet of sales. And that's mostly residential. Nothing significant in other asset classes. Nothing in office, very little in retail. So mostly residential, about 1 million square feet is what we are hoping to book next year.
Great. And what is the cash flow generation we are expecting in FY24?
So the sale value is what we look at, and sale value is about, you can see our average per square foot realization trend. Currently it's at about 4,500 rupees a square foot.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, sorry to be repetitive, but I missed the revenue target you mentioned for FY24 and FY25. So did you say 300 crore top line each?
Around that much, yeah. No, it could be 24 would be 24 next year would be about, I would not say top line. I can only say because the recognition of revenue depends on a number of factors, on your completion certificate and your how much sale deals you execute in favor of the customer. Till then it carries on in your balance sheet as advances. So sale guidance is what I gave. I did not give any revenue guidance. Sale guidance is about 300 to 400 crores each for the next couple of years.
Okay, sir. Sir, that's great. And sir, margins approximately 40%, which we are currently doing. Can we hold on to the same?
That's EBITDA margin.
Yes.
So EBITDA margin, as I said, the current margins are indicative of our product mix, which is horizontal development, plotted development. We hope to get those kind of margins in plotted development, but group housing margins would be a little lower. So going forward, the mix is a mix of both. It's 50-50.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Monica Arora from Globe Secure Advisors. Please go ahead.
Yeah, thanks for the opportunity again. On the profitability side, how is the outlook in FY24 and FY25? And do you think that we will be able to surpass the profitability path as compared to the last year?
Again, profitability?
Yeah.
Yeah, I think we should be able to maintain, if not improve, what we have in the coming years. I think it should actually be higher, but I can't say because it depends on the revenue recognition. Sales value and booking value and project launch is a metric that we really follow, because rest everything follows from that with the lag. And those two are looking good for the coming 2 years.
Okay. And also, I wanted to get a sense on how the Lucknow market specifically looks to you. How do you see that market? What changes is happening in those markets? And do you think that it would be a bet for investors next?
I think it's an under-penetrated market given the quality of life it is offering to the residents of the city. And it is attracting a lot of investment. UP is attracting a lot of investment. You may have read the headline in the last couple of days, the Global Investor Summit which happened in UP. It's like 30 lakh crore rupees of investment which has been committed in UP, which is the highest in the country. Even if 50% or 25% gets translated, it's a game changer. And I don't know if you've been to Lucknow, it's one of the shining stars in the next tier of cities in the country after the top 6 or 7 cities. That is getting reflected in the aspirations and the kind of real estate that the city is demanding. And that is not only residential but also commercial, retail. Two of India's biggest malls are open and they're recording record footfalls. There's a Phoenix Mall, a Lulu Mall. So all that is it's reflective of a rising city, rising aspiration, and I think we are the number one brand there and we are very small. So the upside is just huge. The numbers that I'm talking about are very low and there's a lot of room to grow. It's only that it's a difficult real estate market in terms of bringing projects to the market. And this year has been a little slow for us, but we hope to make it up in the coming year and the year after that. And by no way is our growth constrained by the size of the city. I think it has a lot to offer and it is growing every year. So we are very happy to be concentrated in this one city.
Great, so that's very good to hear. And one last question, if I can pitch in. So, and you have increased your beneficial share in the Bareilly project. How much additional cash flow do you think it will generate?
Marginal, so it's gone from 40 to 50. So that's just a 10% increase. So the additional cash will be only to the tune of 10% only, not much.
Okay. That's it from my side. Thank you.
Thank you. The next question is on the line of Ganesh Singh from CCIPL. Please go ahead.
Hi, sir. So I have a question regarding the sales projections that you have said that we are putting out 800 CR of sales projects for the next year. So
no, not for the year, Ganesh. It's for the next 2 years. It's not for the next year. I said for the next 2 years. I mean cumulative. So each year, 1 year could be 300, other could be 500 or something like that. So next 2 years is 800.
For the projects worth 800 crores for the next 2 years, you will be putting out.
Yeah.
So for the current year, financial year, or for the last 12 months, how much worth of projects did we put out in the market?
No, we didn't launch anything in this year. It was all professional stages. We were not able, that's what I said, that the approvals got delayed and various things happened. So all the sales which are happening are just sustaining sales. By sustaining sales, we mean the projects which have already been launched, they have inventory and they keep getting sold. We did not, there was only one project, I think, Twin Tower or something, which was a small project which got sold, launched this year. But nothing significant.
All right. And as per the last 4 to 5 years, we have been seeing the revenues to hover around 100 to 150 CR. But looking at the guidance for next year, I'm very excited, and I just hope that you are able to execute everything perfectly.
There's a caveat there. So the guidance that I'm giving is for the sales value. It takes time to get reflected in as to get recognized as revenue in the books. So that I'm not giving any guidance on. I'm only giving a guidance on the sales value, the booking that happens from the customer. So that's one caveat. But obviously, once you book something, sooner or later it will get recognized in books.
Correct. All right, sir. Thank you.
Thank you. The next question is from the line of Arjun Nagpal from Guardian Advisors. Please go ahead.
Yeah. Hi, Pankaj. Hi. So I think everybody's. Am I audible?
Yes, yes, please go.
I think everybody's talking about the margins and all. I mean, we as shareholders, I'm sure that you'll maintain the margin and all. You guys are a prudent company. What we are looking forward to is higher sales velocity, which I think you are guiding. And if sales are booked, there will be a accrue to the revenue also at some stage. So I think my question has been answered. I think the time has come to sort of up the ante and take this company into a little bit of a higher orbit. And we look forward to that journey.
Thank you again. This is what we are working towards, and thank you for your support to all these years. And that's it, right. Our team is excited, and for the first time, if you would have noticed, I'm actually giving out a guidance for the next year. It's a challenge.
My question is answered. Only if sales grow does bottom line in EBITDA and PAT and this tax grow. So we are aligned that way.
Yeah.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Thank you once again. I just wanted to know when any plans for diversification geographically, because we are 100% Lucknow dominated to a large extent.
Your line wasn't clear. Can you repeat the question?
Oh, okay. So my question is, any plans for diversification geographically? Because we are pretty heavy on Lucknow.
Yeah. So two-part answer to that question. One, we are very bullish on Lucknow, and as I commented in response to one of the earlier questions, that no stretch of imagination is our growth constrained by the fact that we are concentrated in Lucknow. So there are enough examples of many real estate companies in India doing very well, being concentrated in one city or two cities. So I think that it's not that we have got 50% of the market share of Lucknow and we can't further grow there. I think our market share will be less than 10%, and there's a great trend towards consolidation, and I think there's a market share capture opportunity in Lucknow, number one. Number two, Lucknow itself is growing, so that market is great, and we should not be distracted by moving out of Lucknow. That's number one. Number two, we have taken baby steps towards geographical diversification, and our transaction in the Bareilly project was a step towards that, and we took a small step by taking a 40% stake. And we increased because the project did well, and we increased it to 50%. Similarly, we are looking at a couple of other markets, so that but we don't want to dilute ourselves too much from the focus on Lucknow. I know we had a kind of a sedate year or a flattish year this year, but we are convinced of the opportunity in Lucknow, and just like there are some great companies out of Hyderabad or Bangalore, we feel that the same thing can happen with us in Lucknow. So we are really concentrated. I gave out a guidance for the next couple of years. It could even go higher. I don't want to say too much. So I hope that answers your question. To answer the question, if you're thinking that you come to NCR or you go to some other city, no, not at this stage. There is enough opportunity there.
Okay, got it. Thank you.
Thank you. The next question is from the line of Abhishek Agarwal from KR Choksey. Please go ahead.
Hello.
Yes, Abhishek, go ahead.
Yeah, sir, my question is, as we are seeing that the interest rate is rising, so in this interest rate rising scenario, how you look at the real estate market, especially on the UP market?
I didn't get the question, Abhishek. Can you repeat?
In this rising interest environment, how do you see that real estate market will perform in next 2 to 3 years?
So again, we are not too perturbed about the rising rates of interest. One, we feel that the interest rate cycle is going to turn. It's not going to keep rising. Home loan rates are now 8.5% or something. But remember, they were 6.5% about a year ago. So just as they go up, they also come down, and everybody is expecting, and I think you guys may know better or nobody knows, but the interest rate cycle is going to turn on. In a 20-year period, there will be multiple such cycles. And the other thing is that the customer's EMI does not really change. All that the home loan company, mortgage company do is they change the tenure of the loan. So it's of academic interest that, in the fourth year the rate of interest is higher and in the seventh year it is lower. At the end of it, the customer ends up with a loan of 20 years and ends up prepaying. The data is out there. They end up prepaying in the sixth or seventh year. That's part number one. The part number two is we found that not a lot of people surprisingly are dependent on home loans, especially in tier 2 towns. So in a city like Bangalore or Delhi or Pune, with the kind of the market is IT employees who are getting a salary, so that's very, the data suggests that's very home loan rate of interest sensitive. But in Lucknow, that is not the case. There's a lot of organic demand. And we find that not more than 25 to 30% of our total receipts come from through home loans. So it's not very sensitive to that extent. So it's not does not perturb us that much.
Okay. And are we looking for any new geography apart from our existing area?
No, not in the immediate future. No. We have enough on our hands in Lucknow, and we have given out our guidance.
Okay.
And we are focused on launching these projects in the next 3 to 6 months.
Okay. Done, sir. That's all.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vivek Chaturvedi, an individual investor. Please go ahead.
Hi, Pankaj. Good afternoon. In your management commentary, you mentioned that we acquired a total of 16.52 acres of land between April and December. So how does this compare with what we've done in the past couple of years, and how much land are we looking to acquire in the next couple of years?
So the land that we acquired is something which we have not disclosed, but it is going to come in Imperial Phase 3. So if you look at our presentation, there's Imperial Phase 1, there's Phase 2, which is about to get launched, and there's a Phase 3, which is going to come. So it is largely made up of that. There are some other parcels which I have hinted in the past that we've given advances on. We will be not be in a position to disclose the exact details of that because it will be premature. But that's what it is. I think we could be acquiring about 1 million square feet every year. So that's what we want to sell out in a year. And so that is what we will have to replenish every year as well.
Okay. Thanks. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Ganesh Singh from CCIPL. Please go ahead.
I have a follow-up question. So we're putting out 8 CR of projects for the current 2 years. And you mentioned that for the last 1 year, there was insignificant amount of projects that were rolled out, basically. So I just want to understand on average, what would be the sale value of the projects that you put out annually, say for the last 4 to 5 years? What would be the sale value of a project you put out annually? Is that the question? Yeah, correct. So kind of lumpy, Vineet. Last year we put out a project which was Imperia and Imperia one, and that had a sale value of about 100 crores or something, maybe slightly more. And then after that we could put out one this year, Twin Towers, which is about 50 odd crores. So this year has been flattish, but we hope to be launching, as I said, 300 crores or more annually in the coming year onwards. It has been kind of low in the last 2-3 years because of COVID, all the approval issues, land assembly issues. But I think we are finally coming out of that.
Okay.
So on higher velocity in the coming years.
All right. So on average, we would have been rolling out about 100 crores projects annually.
No.
Last
3 years we have 100 maybe, but going forward much higher than that. So that gets reflected in your top line also. No? Our top line has been between 100 to 150 crores in a year.
Correct. Yes, that's what I was trying to get an understanding of the conversion. So all right, sounds great. Thanks a lot. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
I think I've given a lot of comments already. So thank you all for coming today and for your interest in the company. We hope to do well in this last quarter of the year, but more importantly in the coming year. We're really looking forward to that. Thank you. Bye-bye.
Thank you. Ladies and gentlemen, on behalf of ELDECO Housing and Industries Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.